Imagine waking up tomorrow to news so explosive, so financially seismic, that the small weathered stack of Vietnamese dong notes you've had tucked away in a drawer for years is suddenly worth not just double, but potentially hundreds of times its previous value. This isn't just a speculative daydream or the feverish hope of online forums. This is the very real, and for many, entirely unexpected, financial shockwave that is quietly building towards the year 2025. A hidden trigger is being set, and most of the world is completely oblivious, going about their daily lives while a handful of informed individuals are positioning themselves for a wealth transfer of historic proportions. The common narrative you've been sold is that the Vietnam dong, like many other exotic currencies, is a volatile, high-risk, long-shot bet that may or may not ever see a significant revaluation, a story pushed by mainstream financial analysts who are either woefully misinformed or have a vested interest in keeping the masses in the dark about the true mechanisms of global currency reset. But what if I told you that the entire foundation of that narrative is flawed, built on a fundamental misunderstanding of Vietnam's economic trajectory and a deliberate overlooking of the geopolitical chess game being played out between East and West, a game where the Vietnam dong is not merely a pawn, but is being groomed to become a powerful rook, capable of changing the entire dynamic of the global financial board. The evidence is not found in the hyperbolic claims of gurus, but in the cold, hard, and publicly available data points that paint a picture of a nation undergoing one of the most rapid and sustainable economic metamorphoses in modern history. A transformation so profound that it simply cannot be contained by its current currency valuation for much longer. We are going to dissect this evidence piece by piece, moving beyond the noise and into the realm of verifiable facts, because understanding the why and the how is the only thing that separates those who will be caught completely off guard from those who will have secured their financial future when this hidden trigger is finally pulled. The first and most critical piece of this puzzle lies in understanding that this is not an isolated event concerning only Vietnam. It is intrinsically linked to a broader global de-dollarization movement and the strategic rise of the ASEAN economic bloc, which is rapidly becoming a new epicenter for manufacturing, technology, and foreign direct investment, all of which are flowing into Vietnam at an unprecedented and accelerating rate. This influx of capital is not speculative hot money. It is foundational, long-term investment in infrastructure, manufacturing plants, and technology sectors, building an economic engine of immense power that will inevitably require a currency, reflecting its true strength and global standing. A recalibration that the State Bank of Vietnam has been meticulously preparing for through a multi-year strategy of strengthening foreign exchange reserves and implementing monetary policies aimed at ensuring stability for the inevitable jump. The world is focused on the Chinese yuan, or the Russian ruble, in the context of challenging the US dollar's hegemony. But this myopic focus is causing them to miss the silent runner, the Vietnam dong, which is poised to become the breakout star of the ASEAN region, and the data from the World Bank, the International Monetary Fund, and Vietnam's own Ministry of Planning and Investment all corroborate this trajectory of unstoppable growth. So the question you must ask yourself is not if this revaluation will happen, but when, and more importantly, whether you will be on the inside of this financial information loop, armed with the knowledge to make informed decisions, or on the outside, left wondering how you missed the signs that were so clearly visible all along. The mechanism behind this impending currency jump is not a mysterious, secretive event, but a logical culmination of economic fundamentals reaching a critical tipping point. And to understand it, we need to look at Vietnam's export economy, which has consistently been smashing records, creating a massive and sustained trade surplus that pours billions of US dollars and other foreign currencies into the nation's coffers month after month. A sustained trade surplus is the single most powerful indicator of a fundamentally undervalued currency, as it demonstrates that the country is selling far more to the rest of the world than it is buying, creating a constant and powerful upward pressure on the value of its currency. A pressure that the central bank can only suppress for so long through market interventions before the dam finally breaks. For years, the State Bank of Vietnam has wisely been accumulating these incoming foreign currencies into its formidable and growing foreign exchange reserves, which act as a giant shock absorber and a war chest, ensuring that when the revaluation does occur, they have the financial firepower to maintain stability and prevent the kind of volatile spike and crash that skeptics often warn about. This strategic accumulation is a clear signal to any astute observer that the government is not just hoping for a stronger currency. It is systematically engineering the conditions for a managed and successful transition to a higher valuation, a process that is methodical, deliberate, and backed by solid economic performance rather than mere speculation. Furthermore, Vietnam's inflation rate has been maintained at a remarkably stable and low level, especially when compared to global averages, which is another cornerstone for a successful currency revaluation, as it proves the economy can handle a stronger currency without triggering hyperinflation or causing undue harm to its export competitiveness. The second major driver is the staggering amount of foreign direct investment, or FDI, which continues to flood into the country, with multinational corporations from Samsung and Intel to LG and Foxconn establishing massive, state-of-the-art production hubs that are not temporary setups but long-term commitments to Vietnam as a global manufacturing powerhouse. This FDI is not just creating factories. It is transferring technology, building a highly skilled workforce, and integrating Vietnam irreversibly into the global supply chain, making its economy more diverse, resilient, and valuable, which in turn makes its currency more desirable and fundamentally stronger. The third and most overlooked factor is the digital transformation and the rapid growth of Vietnam's domestic fintech and banking sectors, which are creating a more sophisticated and deep financial market that can better accommodate an internationalized currency, moving it from a primarily domestic medium of exchange to a potential vehicle for regional trade and investment. When you combine these three powerful forces, the massive trade surplus, the relentless inflow of foreign direct investment, and the deepening of the financial system, you create a perfect storm of economic conditions that all point in one direction, and one direction only. A significant upward revaluation of the Vietnam dong is not a matter of if, but a matter of when the government decides the time is strategically optimal to pull the trigger, and all indicators for 2025 are aligning for that precise moment. The hidden trigger, therefore, is not a single button, but the convergence of these macroeconomic trends reaching a point of no return, where maintaining an artificially low exchange rate becomes more economically damaging than allowing the currency to find its true market-reflective value, a value that will undoubtedly be substantially higher than it is today. Now, knowing all of this, the most critical phase begins, which is what you choose to do with this information, because knowledge without action is merely entertainment, and the window to position yourself advantageously before this information becomes widespread public knowledge is closing faster than you might think. The global financial landscape is on the cusp of a significant realignment, and currencies like the Vietnam dong are at the very heart of this shift, representing one of the most asymmetric investment opportunities available today, where the potential upside dramatically outweighs the risk, provided you have acquired your currency through legitimate and secure channels. This is not a call for reckless speculation, but for informed, strategic positioning based on the overwhelming evidence of economic fundamentals and geopolitical trends that we have just meticulously laid out, a logical conclusion drawn from a cascade of verifiable data points, rather than from hope or hype. The journey to this point of understanding is what separates the proactive investor from the reactive crowd. And by watching this video to its conclusion, you have already taken the first and most important step, which is to seek out original, data-driven analysis from outside the echo chamber of mainstream financial media, which consistently fails to identify these paradigm-shifting opportunities until it is far too late for the average person to benefit. Your next step is to continue this education, to dive deeper, to question everything, and to build your own conviction based on facts, because the future of your financial freedom depends on your willingness to look where others are not and to see what others choose to ignore. The story of the Vietnam dong in 2025 is still being written, and you now have the unique opportunity to be not just a spectator to this historic financial event, but an active participant in it, securing a position for yourself and your family before the rest of the world wakes up to the reality that is already unfolding. Do not let this moment pass you by. The information is now in your hands. The analysis is clear, and the trajectory is set. The final decision, the ultimate call to action, rests entirely with you. If this deep dive into the real forces behind the Vietnam Dong has provided you with value you cannot find anywhere else, then your path forward is unmistakably clear. Subscribe to this channel right now and turn on notifications, because we are building a community of forward-thinking individuals who are dedicated to uncovering the truth behind global finance. And this is just the beginning of the conversation. We will continue to provide this level of original, organic, data-based analysis, cutting through the noise to bring you the signals that matter. And you will not want to miss our next groundbreaking report. The hidden trigger is set. Make sure you are positioned correctly when it fires. Subscribe now.